Well, 3 FX firms put themselves into receivership or on the sidelines last night, depending on how quickly they can get access to capital. Alpari, a large English firm that specialized in Forex, plus other commodities too, is the biggest name on that list. Firm out of New Zealand is gone, and FXXL in the United States is up on the board. The losses and the deficits will have to be made up by their client base if they can do that. And what you find in the futures market is that when you have a peg like a floor on the price of wheat or corn or the Swiss franc, everybody over time will become complacent. They'll build bigger and bigger and bigger and bigger positions, and they're trading for smaller and smaller moves. The market will just get down and they'll just be right up against that peg, and to cover your overhead or to make your money, and you got this wall that you're leaning against, every time it rebounds from that, you sell it or buy it. It hits the peg, it comes back, and you make money. But over time, these moves are less and less and less. So you put on more and more size as you play the program. And then one day, the market comes away from that peg, and you've got way too much size on. The market has moved, has burned up your margin, and you've got to go make the account whole again. And that's why you can't trade this market without capital. You can't put yourself in a situation where you are subject to a black swan. Without capital, you can't trade. And a lot of people, these houses that allow you to day trade for $500 to $1,000 a position, and I don't know what they are in the Forex houses. Some of, I mean, imagine you could trade for even less than that. They're the first to go. They're at the bottom of the pile or the bottom of the heap. The way that they compete with the people at the top of the heap is to require less capital, lower commissions, no research, you do it yourself, etc. And those are the firms that when something big, when the market resorts itself, that are left holding the bag, so to speak. Every 2 to 3 years, and 3 is probably closer to it, a commodity market can turn itself on its head. And it just gets so far overextended one way or the other that it's got to go the other way. I mean, the air comes out of a balloon, or it explodes up off the lows. The Swiss franc pegged in 2011, so we've got at least 4 years of this phenomenon, and that's what happened. So some people are cheering the action by the Swiss franc, have said that that's about time. The question now, what does the ECB do? The speculation yesterday was that either after the Greek elections or on the 22nd, so the 22nd till after the Greek elections, they're going to do something. Last week, Spain's largest bank said that they could not meet capital requirements. Today, we awakened to find that 2 Greek banks had runs on them. We also awakened to see long lines at currency exchange outfits in Geneva, Switzerland, of all places. So the ramifications and the fallout of this, the news is going to keep popping up. We're going to read about more firm people that are bankruptcies. So the dollar is up because people are taking their money and putting it in the United States. Why? You got the interest rate differential. You can make a little money, and I guess the least bad choice. The United States has a lot of potential. If we were to open up energy exploration in all forms on federal lands, if we were to take the EPA, OSHA, and every other regulatory agency off of American companies' backs, if we were to change our tax law, if we were to forgive the $2 trillion in profits that are sitting offshore that can't come back into the United States, the United States economy could explode to the upside. Our energy costs are lower than anybody's in the world. All heavy manufacturing, steel, smelting, foundry type work, high BTU, chemicals and plastic could come back onshore. And that's another reason that the dollar continues to go. But our government policy right now is taking us to the point where it's going to be very, very difficult to reverse or turn things around. So, dollar strong, other currencies weak. What is the ECB going to do on the 22nd through the 26th? And everybody says they're going to do a massive QE now. That's what the Swiss bank move signaled. So the trial balloon that's been floated is $500 billion per month with some sovereign debt. And the German courts last week said that they could buy sovereign debt. They could finance the debt of their EU members with certain restrictions. So the stage is set, folks. Okay, we are at 23. We've got our 4/5-letter ledge at 28. So I think the easiest trade to see is selling failure to take out 131. We're high. We're pointed higher. Everything says that we should trade higher. Now we have to. So then the second trade would be the 7 to 11 area. We'd open it up. We go through 141. On the buy side, we had our breakout from 16. So 17 to 13 is buy 1. And then 5 to 9 will be buy 2. And if we reject higher prices early, we'll probably back our buy down to that second area. CPI, -0.4 based on the cost of energy. Core, +1. No paying attention to this because the Fed is not raising interest rates to fight inflation. Industrial production, this is the biggest number, -0.1. Manufacturing production, +0.2. Capacity utilization, 80%. So this would be the focus right here. Michigan sentiment, 94. Stock market's up. It could easily come in that high. And then the last piece of news, net long-term capital flow after the market closes, plus 27 billion, 23 billion. And we have two Fed governors speaking, one at 11. Bullard, the guy that started the rally at the end of September or October, speaks at 1:10 Eastern today. So the focus is industrial production, followed by Michigan sentiment, and the direction of the E-mini. I think the direction of the E-mini trumps all else. Given what's going on in the world and the announcements that will surely come over the weekend as to more casualties and fallouts, nobody's going to get heavy short financials into the weekend. They might take profits today. I think the biggest dynamic we'll face will be profit taking if we don't make new highs, take out 131. And that would make sense if you're a short-term trader. Wow, don't we live in exciting times? And you know, when you look back at what we did yesterday, didn't we get through this okay? Didn't we do just fine off that news yesterday? Didn't we make the calls that we had to make? Don't we prosper? We can prosper during this stuff because we can play both sides of the market and we're short-term traders. And you know, when you sit down and you count your blessings, I mean, that's really a leg up on most people have to prosper when the entire economy prospers. We're like bankruptcy attorneys, collection agencies, repo, I don't even know what you call them, repo specialists maybe. Not part of my world. We can prosper in this, so, and that's something really to be grateful about if you think about it. We do have blessings. They're around us every day. Just have to stop and smell the roses, as they say. Open your eyes. Okay, that's it. Selling 5104.08, and we're going to back the second sell up to 15 to 19. On the buy side, we're 21.25 on the 30-year and 12 to 16. Gold is holding in well, and gold will probably hold in well, and it's holding up for the right reasons. There was an article on Zero Hedge or some of the news services I covered that said the only assets are hard assets, not paper assets, and they have a point. And so when we look at structurally, 75 is the next low volume number, 68's our attractor, and we have rejected prices above 66. So right now resistance is at 65, 67. We're come inside the high, and then we're going to raise it up. We're going to take it up to 73, 75 for sell 2, give it some room to the upside. Now, if we don't take out and we don't make new highs, it's pretty easy. End of the week profit taking. The London low is 55, 57. We liked that area last night. And it worked out pretty well, so we'll leave it there, 55, 57 for buy 1. That was a pretty good trade for those in London. Hope some of you took it. Buy 2 at 50. Okay, the euro continues to sell. Part of the fallout from the Swiss franc yesterday was when will the ECB start QE1? The Greek elections are on the 25th. I believe there's a big meeting on the 22nd. Everybody says the ECB has to do something, and that will involve devaluation of the currency. They will be printing money. We had a Spanish bank last week. We had 2 Greek banks are getting a run this morning. We have long lines probably all over, people bringing their Swiss francs that they've had under the mattresses to cash them in, and other people taking their lumps in their own currency. So we are pointed down. 115 even is the next round number. No reason to think we won't get there. We're in the same spot we were last night. 1575 looks pretty good. Then 1550 would be number 2. 1550 is a better number because it is a round number and will cause the market, but 75 is where support is right now. So put a question mark by 1. Engaging the market at 50 would probably bring in some end of the week short covering. On the sell side, we're here. So we've got 16 even to 1610. It's aggressive as hell. That is resistance, and then we're going to pop it up to 35 to 45. We wanted to lean against 1650 last night. That was a great trade, and hopefully some of you were able to take advantage of it. This 1.16 to 10 is aggressive as can be. It has to happen quickly. You'll want to be in on that trade quickly. And then you got to take out 1575 to stay with it. Okay, when currencies are devalued, either the euro or the dollar, crude can rally. It'll do it on either one of them. They want to make sure that on that daily transaction they get paid what they're due. And so crude is, yesterday it rallied off what happened to Swiss franc and was promptly sold. It came down, so we have our 46 area, pretty good support. Yesterday we had looking at the wrong one. We were 45.75 to 46 even. So that was a great call. Looks we'll raise it to 46, 46 and a quarter this morning. I really don't like the long side. I think the better trade, the trade you have more time with, is from a short side, but it can rally. And then 45.25 to 50. On the sell side yesterday, 46.75 to 47. That was the London high. It blew right through that. It was a good trade up until then, and then it went all the way almost up to 48. So here we are, 47 and a quarter, sell 1, and then 50 to 75 for sell 2. A lot of volatility. You can't get in the way. Surprise announcements out of Saudi Arabia, like we will cut production, will make this market explode to the upside. They've said they won't do that. Now, one of the things that was pretty interesting about the Swiss move, and I don't know why they didn't tell the rest of the world, probably because of all the flack and the grief that they would take and all the pressure they would get politically from the European Central Bank, is that most central banks and governments have telegraphed their punches trying to mitigate those type of circumstances and try to keep orderly markets. The Swiss franc went from 120 to 85, like almost, somebody said, within 13 minutes last night in the futures market. I think in the cash market it probably reset faster than that. And you have to wonder why they did that. And obviously the pressure at home and from everybody would be really, really, really great. Manufacturers, exporters, people on the wrong side of that. I mean, but what they've done is that they have put people out of business. They've hurt a lot of people. And it was done willingly and with foreknowledge. So Saudi Arabia telegraphs their punches. Our central bank telegraphed their punches. Europe has been floating trial balloons on $500 billion per month in QE. And for some reason, Switzerland chose not to go that way. Okay, this low volume number at 70 held. We got a high volume at 65, so this is probably where our first band of support is. The fundamental news this morning, nobody's going to pay any attention to CPI. -4. Core +1. They will. Industrial production is the big number. -0.1. It's not a good number. Capacity utilization, nobody pays any attention to that until inflation is a factor. When it gets over 84, everybody starts to wonder about that. Michigan sentiment would be the second number. Manufacturing would be +0.2. They will look at this number because it'll be kind of key to are we getting a manufacturing resurgence off of cheap energy costs? And some people say we are. I think they're probably right. I think you're having companies relocating into our economy, especially out of Europe. Michigan sentiment, 94 will be the number 2 number. Long-term capital flow, no one cares anything about that one. Bullard and what's the other guy's name? Williams will speak at 11, and Bullard speaks at 1:10 today. So our first buy is going to be 65, 67. Let them get stops beneath the overnight session. That trade, we want our setup before we take that one up. I think the trade is from the short side, and then 55, 57 playing off that low volume number. So we've got a high volume number at 65, and we got a low volume number at 56. On the sell side, the most aggressive trade will be against 80. The last rotate up stopped at 85, so we're going to try 84, 86. It may take an 80 to get in. I don't know. Well, if we get a setup in the 80 area, we can take it to the assumption we'll take out the overnight session low, and then stops above the overnight session high would be sell 2. We do have news this morning. We'll have to pay attention to it. And I will be back with you. It'll take at least 20 minutes to get anything up, around, and posted. I'll be back with you as soon as I can. In the meantime, good trading. In a bit.